Okay. Hi, guys. So I'll be fast. I promise this will be 15 minutes of a presentation. It's going to be very simple. No tricks, only treats. It's Hershey's. We're going to be discussing a company profile today. I've been trying to choose for companies, investment criteria should be strong pricing power, first and foremost, strong cash flow, so that in any environment, these stocks, if they fall further and further more on October, we think that they are going to be a great buying opportunity. So let's discuss that. Okay, let's go straight to today's topic. No tricks, only treats, Hershey's. Okay, it's September 29, 2023. Hershey's is a well-loved brand since 1894. So we're talking about a company more than 100 years in the business and actually listed for more than 50 years. Why do we like it? In summary, it's a simple but wonderful business. It's a strong, iconic chocolate candy brand. It's not just Hershey's Kisses, they've got a slew of brands. They've got strong operating margins. Do you know that they have a gross margin as much as 40 plus percent and a consistent demand all throughout the world? It has a durable global brand with strong pricing power, and they've shown it with stable earnings and dividends. In fact, it's not just stable, it's been rising over time. So it has incredible scale, strong pricing power, non-cyclical nature, i.e., even recession will not stop people from eating chocolates, and a very strong balance sheet. So our criteria has been look at the economic moat. Does it have a cash cow and does it have to protect that? In fairness to Hershey's, they have protected their cash cow business again for 100 years already. Wonderful brand, network effects, inelastic demand, high margin, and they've been using their cash cow effectively through acquisitions over time. They've got a high capex barrier to entry because who else can produce this much chocolate at a cheap scale and wide scale, wide distribution other than Hershey's? Of course, you can argue you've got Nestle and Mars also with those economic moats. More demand and a very differentiated product. Everybody can tell whether it's Kit Kat or Hershey's. You've got a total chocolate market. People believe, I think one of the best investment thesis here is that people believe that the chocolate market is growing at about 4%, whereas these companies are actually growing at more than double digit the scale. So double digit in terms of sales. So that means that they are outperforming with their pricing power and demand. Yes, over time, it has been recession proof. Revenues and profits have never stopped, even during recessions. And we believe that in 2024, even if we get a recession, that would spell the same record year for Hershey's, even in 2022, 2023, which has been evident. You'll see that over time, total operating income has been growing. These are trailing 12 months operating income, operating margin. In fact, it's just been growing and has been beating expectations even after the last few quarters where you've got all-time high price on sugar and all-time prices on cocoa. In fact, Hershey's expect their full year earnings this 2023 to be roughly in the realm of $9.50 per share, which equates to actually a 20 times PE ratio. For those wondering, if you buy the $200 per share tonight, you're paying a 20 times multiple for a very well moat company. You can see that gross profits have grown over time in the last 13 years. This is the gross profit realm of 2 billion growing to about more than 5 billion dollars here. Gross margins have been steadily at 45%. Return on equity is very high over the last 10, 20 years, 60%. Increased dividends paid from 46 cents to about $4 in as much as 20 years in tandem with their rising earnings. So very strong company as a dividend in terms of retirement portfolios. Hershey's is a stable dividend earnings compounder over the years. If you want to check Hershey CEO Michelle Buck discussing bullish outlook, stock nearing all-time high. This reached as high as $280 and is now trading at $200, which is why we are featuring this company. No change in the reasons why to own it. You can just watch that for yourself. Look for this CNBC clip yourselves. Hershey's Land, for a brief backgrounder, their brands Hershey's, Reese's, Twizzlers, Jolly Rancher, Brookside, York, Barkstein's, Icebreaker, Kisses, Kit Kat. These, in terms of products, you can see that they've acquired Skinny Pop popcorn, they've acquired Dots Pretzels, Their brands can be shown easily. You can see that all in the top well-known brands, not just during Halloween, but all throughout the year. So pretzel brand, actually the fastest growing brand nowadays is Dots Pretzels. They own it. Also Bark Thins, they own that too. So these are their acquisitions. Other than that, you can see that the most well-loved chocolates are owned by them: Reese's, Kit Kat, M&M's. Most profitable and long last. Oh, sorry, M&M's is in Mars. Most profitable and long-lasting products equals chocolates and candies. That's why we want to own them. A portfolio of iconic brands. Hershey's also has been thriving on innovation and pricing amid cost woes. As I said, we didn't really see any decline, even if chocolate prices have been soaring to $3,600 per ton. That's 100% higher than last year. Um, so they were able to actually continuing to optimize their operations efficiency, output, and they're passing it on not to increase their prices, but really to just for gross margin stability. Similarly, in July 27, 2023, not only did they beat results, they also raised and reaffirmed their net sales outlook, reflecting additional acquisition costs. Take a look this year. Orange juice is up 80%. Cocoa is up 50% year to date. Year on year, that's actually up 100%. Sugar is also up 45%. Every chocolate and sugar company, all competitors are actually drowning, whereas they are still continuing to grow their profits and declaring all time high dividends. Winning portfolio of beloved brands, unmatched capabilities to connect to consumers, a dynamic workforce. They're actually in the top 10 best workforces to be in the entire country of US. Long-term view guiding their growth. These are the use. In case you're wondering, why are you able to buy this stock and why are we featuring the stock? You have the headwinds, which is the sugar shortage. Obviously, this didn't dampen the earnings, so use that negative news at your advantage. Sugar shortage ahead of Halloween holiday season. Soaring prices and sugar shortages have made makers of candy canes, peanut brittle, and lollipops feeling sour. Halloween candy purchasing plans historically. You can see that from the candy stores, no dampening of demand. Every Halloween season has seen a spike in growth of candies. Next this year is no not different. It's gonna be in a $3 billion sales. America's favorite Halloween candy is owned by Hershey's. You've got Reese's Cups, Hershey's Kisses in your top 10. Um, why are we featuring Hershey's? Because you're getting a discount on a business with a leadership position, again, in a recession proof industry. It doesn't come around very often. You get a top tier ROI, a well dividend, a great dividend, 2 to 3% dividend yield, strong brand in its industry. Wanted to feature this company because it's also been featured in Motley Fools, which we agree upon. You've got best-in-class profitability compared to Tootsie Roll, Mondelez, and Nestle. This company is home to over 100 brands sold in 80 countries. You've got consecutive years of dividend increases, not just 13 years, actually more than 30 years. So you can read that article by Josh Con Lindquist. We agree with that. History suggests this S&P dividend grower is a magnificent bedrock stock to buy and hold forever. Agree with this statement. Agree with Hershey's. The chocolate market is valued around $20 billion. The number is expected to reach 30 billion. Other believe 50 billion. We agree. This is coming from National Confectioners Association. The bad news that you'll hear is cocoa prices are spiking due to severe drought causing a shortage. You've got El Nino. This is the exact chart of cocoa prices. Year on year, you see that it went from 2.4 to about 3.6. Last year, it's since 1.7. So actually double the price year on year. Yet demand for chocolate still fuels is there. Actually, the demand for chocolate has never abated over the last 50 years. This is your bad news. Strong El Nino could trigger a lot of continuous cocoa price spikes. Chocolate is getting more expensive, soaring to all-time highs. And yet, we agree that there are companies that have demonstrated the ability to raise prices without losing customers, which tends to be rewarding for shareholders. This is true for Starbucks, McDonald's, Coca Cola, Pepsi, Apple, Nike, Campbell Soup, P&G. These are just a few of the companies which we have seen a demonstrated ability over the last 50 years, and we don't see that changing soon. Same thing for Hershey's. So pricing will be an important lever for us this year and is expected to drive most of our growth, said by Hershey's CEO in 2022. Same thing in 2023. Um, Strategic price hikes. While inflation has been rising 7%, and even if it has been going down, we do think that this category of chocolates, sweets, snacks have never actually deteriorated, so they're able to actually pass it on. Starbucks, McDonald's, as evidenced by their earnings. So part of the stocks to buy and hold forever. Great company with pricing power and moat. You can only acquire this at a 40% discount versus historical valuation just due to the commodity spikes. So simple reason why we like it: dividend king, cash flow, strong brand. So in a nutshell, we like coffee, chocolates, and sneakers, Starbucks, Hershey's, Nike. But today we're just discussing Hershey's. Stocks include in your portfolios. All of them are cash dividend, consistent payments. All have a valuation so far 20% discount from their historical valuation if you check their PE ratios. All have a proven pricing power. All are really big retirement portfolio names with growth and not mature yet. People actually believe that their terminal growth is about 5%, but look at their quarterly reports. They're actually showing double digit growth, and gross margins well above 40 to 50%. Monopolies in their respective niches. Nike sported a 45% gross margin. Hershey's 45%, Starbucks also in the 30 plus percent category. So very, very strong moats. We think that they're going to hit 30 times PE. Think that the $200 for Hershey's can eventually grow to $300. The lower Hershey's goes down 200 to 180 or 160 is an opportunity to buy. And that's the awesome 10x call. That's it. It's very fast. Um, you can look back to this. Stream. But yeah, you can read through it. I read through articles and the earnings reports, and which leads me to believe in that conclusion. Okay, so no tricks, only treats. For your Halloween, take a look, take advantage on Hershey's. Bye bye.